All right, guys, we've got regular Sunday Scan back and finally almost caught up on sleep. It's been like 2 weeks of jet lag back and forth, and it's been hard. It's been hard in the mornings, and finally, I think today I caught back up. So there's always like that false sense of you've got it, and then 2 days later you just crash. So that was pretty much my week. But this past Sunday video, we talked about a little bit of the adaptation process and what's needed in this current market, as well as some liquidity traps, which went up like crazy. SNTI went nuts all the way up to, I think it was 850 or so, and it was, I think, barely into the twos when we were first talking about it. They're not all going to go like that. There was another one, I forget the name of it, but it did go 50, 60 cents and then started to fade off. But remember, it's all about understanding which ones have the potential. If it does everything that it needs to do to have that potential of that secondary move. Doesn't mean it's going to happen, but at least you know which ones, if they do go, have the potential for that exponential move, like something like SNTI. So, small caps continue to kind of pave the way, especially in momentum trading world. Obviously, there's been some fantastic opportunities. AMD complete unwinder after the news. Unfortunately, I was shorted on Thursday. Friday, I tried it long towards like an hour to close or so. Made money once and then lost on the second try. But nothing that I sized. My goal was just to kind of get in there and wait for that turn and wait for that setup so that I could start to risk. And as you saw in the room, I drew like a line. I think it was 59 or something, and basically said, I have zero interest unless this level starts to base. And that's really the thing about this current market environment, where you want to be on the same side as the money. You don't want to be anticipating, where it's going to turn, because if you're in there with too much, it's very easy to add again, end up 2, 5, 10x what you expect it to be, and then have the bottom fall out. And I think a lot of people ran into that with something like AMD on Friday, where you kind of go in, you're used to it trading $1 to $2 a range, and maybe you got let out of a couple situations, but then all of a sudden, it didn't bounce. So you added again, and then it dropped $2, right? And it's those types of situations that really, smack us hard. So I was happy to avoid that, despite being wrong, despite trying to get involved in that bounce. It just was nothing to actually scale. So I talked about adapting a lot last week, and I had mentioned something, and EDU Trades that I met in Las Vegas had tweeted it. But basically, in this market, it's not hard to find the right stuff, but it's hard to do the right thing. And we were talking about this in the lounge all week, and everybody, it's easy to say that the market is hard. It's easy to say the market changed and it's not as giving as before, this and that. But as a trader, that's what it's about. You have to adapt. It's not always going to be just a kid in the candy store and taking money here and there. It's about not making excuses, not just being okay with the fact like, okay, it's harder, but actually kind of identifying the changes that you need to make. Now, personally for me, that took me about 4-5 days. Towards the latter half of last week and then the beginning of this week, I found really great trades, really good entries, really good, trades off the open, flush down. I was up a lot, and you want to let those trades work in any other market, but not this one, right? So for me, one adjustment, and I was talking to somebody in the room who wasn't doing very well, but they were up, but they just kept on giving money back, right? They kept on either going flat or down on the day. So what I suggested and what has helped me is when you get into a position, you kind of have a ballpark idea of where you think it's going to go, right? You're taking the trade because you think that this risk is good based off this potential reward. And a lot of times if you just put your offers out there, whether it's on the long side, for the offers out there, or the short side, put your covers there. I'm not talking about the entry. I'm talking about the exit. A lot of times you'll see that it'll flush right to that level. That's the liquidity point. And then, it kind of comes right back up. And it's just whether or not it stays heavy. And if it doesn't, if it swipes back up and it just kind of stays relatively, kind of thin, well, you either got to wait to see if it gets heavy later, or you're going to be part of the problem starting to walk it back up because there's not much liquidity. That's what I was running into quite often, where, I thought it was going to go to a particular level. It actually went a little lower, but I wasn't there. So it flushed down, went lower than I thought, came right back up. And then I'm too proud to take it off, right? Because I was just up 40 cents more or 50 cents. Then it came right back up 30. So I'm going to, be patient. I've still got a good padding, but then just slowly, steadily grinds higher, right? So that was my Tuesday, Wednesday. Not horrible, just minimizing. I probably captured 0 to 20%, 25% of what I was up on the day off the first hour or two. So that to me was a problem. It doesn't mean the market's hard. It just means that I need to adjust personally. The market is not rewarding what it was before. That's all that's happened with the market. So you have to understand, where adjustments need to be made until this cycle ends. And once this cycle ends, we're going to go right back to it. And, people will make another excuse as to why it's hard. Don't get me wrong. Market's always hard. No matter what cycle you're in, no matter what type of market you're in, it's going to be hard. But it's just about kind of fine tuning and figuring out how to perform within, each market cycle that happens. So, let's see. I really just think it's a shift in the mindset, shift in how you think about things, because, I talked about this with a lot of people in the lounge, and it's just so easy to be like, oh yeah, it's hard. It's just, it's whatever. I'll just wait until it gets easier. Or you can use this time to adjust and maybe try different, new things. I'm not saying be aggressive. I'm not saying go for it. There's nothing wrong with taking your foot off the gas, but it's definitely a good time to review how you could perform better within this current market tape. All right. So, also felt like last week, on Thursday night, I tweeted that I felt like the small caps were on borrowed time, and that I think that everybody got rewarded for recklessly buying, right? Everything came in off the open, consolidated throughout the day, and then squeezed out into the close, gap down the next day. So what that tells me is everybody's short, buyers, didn't sell, covers didn't come in, covers came in, sellers sold, gap down, right? So once you see that a few times, but they're still letting people get, excited about buying into the close, buying for the breakout. And as you saw on Friday, that didn't end well for most. So at any rate, maybe we go back to, how it was working before. But for now, I like the, putting orders in where I'm anticipating a trade to go to. And if it stays heavy, I can always re-add. A lot of times you'll notice that, it goes right to that level, thins up. Maybe it's an hour or two of consolidation before you put a position back on. But at least you're out, you're downsized, you don't have emotion. If it does ramp up, you could potentially be starting back in or adding instead of freaking out into, some sort of push that you should allow it to test anyway. All right, so things to keep in mind for this week ahead. Liquidity is always your friend. You saw me get excited about Tilray. Tilray is a thick name. It's not something that's just going to go, up 30, 80, $1 on, no volume, right? So for me personally, I like to focus on situations like that. Big float, good volume situations, exactly like you saw on Tilray, versus something like, SNTI and all these other ones that are relatively thin, where you could behave, and then it circuits one way or the other, right? That's annoying. It's an added risk that we're not used to, and it makes for some headaches sometimes. So anyway, the other thing too is something like Tilray nailed it off the open, flushed, covered, a bunch. Rebounded and it stayed heavy, so I rescaled back in. There's nothing wrong with putting it back on. It's better to be safe than sorry when it starts to rip back the other way. Another note that I had was AMD unwinder. I already went over that. Personally, for me, I was happy with the way that I treated it. I started in. I did not add. I was probably in about 10% position. I wanted to scale. The only way I would go half size or above is if it were to base with a higher low and have a set risk. going back to where have you seen this before? One of my favorite things to do to kind of paint the picture of what's possible. And then that way it allows you to sort of react and look how things have reacted in the past to be able to benefit. So PEGY this past week, huge ripper, nice unwinder, but it held on. It only had, I think, 6 million and change float or something like that they can raise, but it's, people look at the $100 million offering, but they can only raise a small portion of that. So I think a lot of people got confidence with the offering potential, with the size of it, forgot that it's a relatively small float, and it was trading like it was a 30, 40, 50, 60 million share float. So it was trading extremely thick. You could get in and out with any size that you wanted, really. And then obviously it punished folks after hours and Friday. For me, that was a long trade. I was short on Thursday. I think it was Thursday. Into the open, flushed out, and then I wanted to reverse to the long side. Gave a great opportunity. It was Wednesday. Wednesday I was short, and it held extremely well. And like I had said in the room, if it closes weak, which it flushed down to 250s, I would not be short whatsoever because it reminded me of MRIN. Then Thursday, nice gap up, faded into the open, flipped short, which is something I've been working on. And then Friday, obviously, we had a nice gap down after blew all the shorts out on Thursday night. But at any rate, still consolidating. One thing that I wanted to talk about, adjusting your mindset, on a play like that. I was a broken record in the room because, it's setting up nicely, but I reminded everybody every time that it started to look good. It's probably a better sell, right? Because everybody's starting to come around to the long side. And if you look, 350s to 370s is sort of your consolidation spot. So if it blows out through 380s quickly, probably a good sell so that you can add in the 340s, 350s, or at least, not be emotionally attached. The only way you're going to make it to when it went to the 480s is by locking in around the core and not, getting chopped up around. So think about taking a step back. What is the big picture area that we need to see hold, rather than thinking intra-minute and, okay, if this breaks out, then I'm going to buy. It's probably going to stuff. It's not going to work on your timetable. So you just have to take a step back, let this thing kind of, work through and prove that, you're right. Channel plays. We talk about channels all the time. And these are things that used to suck all kinds of my time. And I'd end up in a situation with too much. I'd go ahead and take it off, and then I would have been right all along. So it's all about giving yourself the best shot in this situation. And ATXG was one of them. And ATXG was, ADTX. I think, yeah. ADTX was one of them, and the other one was LUCY. So basically, these types of trades you can see, and I'll post the charts, but sideways consolidation, the sooner that you realize that it keeps on touching this baseline, the sooner you need to be locking in. It doesn't matter if it cracks under it. You can always add back, but it's better to be safe, same as we talked about before, than sorry when you have too much and it breaks right through that prior top. So those were two good examples. Lucy, same deal. Also, understanding at what time they break out. Pre-3:30 p.m., premature breakout. We talk a lot in the educational material that we have. As far as if it's starting to be strong and break out 132 or pre-3:30, then there's a good chance that, there's enough time for it to unwind back towards the end of the day. Given the fact that it was Friday going into the weekend, a lot of shorts don't want a headache. Probably take off the short into any panic, into any emotional kind of push. And then as you saw, exchange, slam. And then last but not least was the liquidity traps are still working extremely well, which obviously you saw on SNTI and a bunch of the other ones this week. So that's really all for the recap. What's working, what's not, how to adjust. Like I said, it's definitely a different market, but don't let people tell you that it's hard. It's just little minor adjustments that you need to make. And I think the hardest part is actually making those adjustments and doing what you know to do. Because I knew like 10 times, on Tuesday and Wednesday, all right, I just said that I need to take it off. instead of, kind of letting it work, but had a good average. I want to let it work. And then it starts to, slowly grind back, and it drives you crazy. So that took me a couple days to adjust, like I said, but seeing everything clearly still. Would I like to be performing a little bit better? Sure. But I'm happy to be performing, and I'm happy to just be, at least sideways or up rather than going backwards. If you're going backwards during this time, just take a break. Take a break, take a little chill pill and relax and just kind of review, what you're doing. And a lot of times you'll realize that you're doing the same thing over and over, expecting different results. Think about it, review your trades, and make sure that you're not going backwards right now. This is a time to keep your money, not throw it away. All right, guys, so for the second part of a scan, before I forget, Dagmara and Flight Spot, you guys have the free t-shirts for this week. Email me, webmaster@investorsunderground.com, and we'll send them out. Before I forget, as always, not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. So if you're here to be told what to buy or what to sell, you're in the wrong spot. If you're here to learn what I'm looking for, what I think you need to know in this market, what I think doesn't work, what I think works, and the proper mindset to kind of get prepared for, as soon as Monday, then you're in the right spot. All right, so let's get right into things. Main watches for me, a little bit different this week. I think we'll still have some pretty good opportunities. Lucy was fantastic. Pretty much held the channel all day, and we were talking about it in the room, basically being that 305 to basically 330 range, 320 range. It was pretty much stuck in this area right over here. And throughout the day, the more confident you get, the more aggressive you get, kind of anticipating a trade to happen, the more likely that you are going to be covering into this top end zone. And that's what it did a lot of times. Everybody gets confident. Each time that it fails, the last time, lining up with 3:30 p.m. like we talked about, people get nervous. And it breaks through that level, gets all the stops out, and then slams. That's their exit. They want to fabricate that photo, that picture, that they want to make you feel a certain way, that it's like, oh my gosh, I can't go to $4. I need to cover now. That's exactly what they did. You see the volume associated with it, and then obviously it stuffed and failed to follow through. So anytime that happens, I want to see it basically stuff into those prior lines. I need to see an exchange happen. If not, and it's just slow and steady, then it could randomly fade, but there's no edge, right? So yeah, you could be right if you shorted and it faded, and I do think that the risk is much higher in that case. But in a situation like this, I want to see that exchange happen before I start to put on any aggressive position. So higher the better. In a situation like this, unfortunately, it came down quite a bit after hours. I covered most of it. I still have small bit short, but I'd love to see a morning ramp towards 270s, 280, something like that. Just based on looking kind of left over here, and this would be an ideal kind of exhaustion zone. So 250, 260, rip to the 275 range, and then ideally sit back. So be prepared for that. I'd definitely be watching that one. BHBN, slowly but steadily starting to fail. You can see overall, if you do like a trend line here, you can see that it's starting to gather some pressure, and we're up against basically this support line over here. And in this case, it's 1290s, 1285s or so. I was using 1350s as sort of the guide, so ideally pushes towards those levels and then start to get involved. If it started to ramp up and I had sized up, then I would need to size down in that case. But I think that this is going to start to lose a lot of volume, but I think it was a spin out. So don't bother looking at this chart. You can look at the one on scan. It has like the new, basically it came up from 6 to 13 or so. I think you've got shorts coming in because it bounced too much. You've got dip buyers basically buying because they think it was just $100 or something, and they're trying to buy the bounce. And when there's that short-term demand over the supply, then we have this kind of secondary move. So be aware of that. But I'm looking for failed follow through ideally. And if it starts to firm up and hold trend, forget about it. AMD, like I said, I tried it into the flush late day, and my goal was to kind of start to see it base and head higher, and that's where I like to scale in, and basically risk towards my entry. Each time that I played the dip, it ripped up, and I had sold some and then stop it flat on the rest. There's just no reason to try to anticipate with any size, a trade like this. And, in my opinion, you can see right over here where there was a nice, kind of consolidation pattern over here. This right here is where I feel like a lot of people bought the dip, anticipated the reversal, and then it failed. And I feel like this was all unwinding everybody that bought in this particular range. So keep that in mind. Other than that, don't expect that this has to bounce. This could continue to fade under 50s. So a morning push and fails could continue to unwind. So I'd be cautious. Just this has got to bounce. If you look at NEO, how many times do you think this thing maybe should have bounced and then it finally gives way? Or something like XPEV or LCID or LI, all doing the same thing, all having those. All right, we're about to bounce, slam, about to bounce, slam. So as much as this could be a great trader, as much as it could be a great long if the market's up, be cautious having that bias that it has to bounce, because it doesn't. We're in uncharted territory. We're in a bear market. This is something that we haven't seen, most of you, ever. Especially if you started trading after COVID, you've never seen this kind of tape. But I saw the financial crisis. I wasn't there for, .com, but financial crisis, that was before I kind of was, maybe at any sort of level that I'm at now. So I wasn't really able to really understand it for what it was and capitalize in a huge manner. I know Fannie and Freddie had happened around that time for those big OTC type moves. But other than that, COVID was the last time that we've had anything. And most traders that, obviously the industry is much bigger now, but most traders only came in after that. So SNTI, nice liquidity trap. So we had this first time that it basically ramped up and faded off into nothing, and then we had this volume day again. So you've got basically 48 million shares this day, you got about 75 million shares this day, and then it held trend. And so that's why, on the scan, I was like, if it breaks this level, go time. Now, you want to assume that it's going to stuff and fail, but if it doesn't, that's when you have those outlier moves. So you want to be cautious of that. Perfect setup. Right now, I think that it's probably going to unwind, and it's probably going to look like, Kit on the backside, something like this, where it's just going to start to fade off the radars and, come in. So higher the better on that. Same deal with Tilray. I mean, monster opportunity. This one was a perfect looking left. I was very cautious about, in the room, I was like, don't ruin your day by having too much of a bias pre-market and taking away, that opportunity. But we saw, steady support in this 375 range. But one of the best types of trades that I like in a situation like this is look left. Use pre-market resistance as, your guide. Doesn't mean that it's going to stop there, but it's a starting point. There's a good edge. Even if it blows through, you're only starting in, and if it stays, you scale in and scale in and scale in. And as you saw, started in, scale. And, somebody had asked, like, how I had so much conviction. But you got to remember that every single 1 minute bar, that's 1 minute of action that you get to see. So although it just looks like pound, there's a lot of retest, fail within that minute. I've only been talking for 20 seconds since I started talking about Tilray. So there's still, so much more. There's another 40 seconds of information before that candle's closed. So that's why you see a lot of those, I'm getting the confidence from the rebounds, and it stays heavy. It doesn't rebound and stay thin and start to kind of grind higher. It stays heavy, starts to fade off. I want to add. GGE was another one that was nice. Fantastic. I dabbled here and there, just got a little feel for it, but I was waiting for the exchange. I knew that I did not want to get aggressive beyond a starter unless 230 started to peak. That was the level that I gave. Or we have some sort of exchange, some sort of action that just, completely, turns the table. And that's what we had. And you saw where I got in on that GGE when I had mentioned that I got short, and it was right over here. And, was I expecting that? No. Did I know it was possible? Yeah. But, I was kind of planning for maybe a 2 to 220 type pull. But obviously a whole lot more happened. So I'd be watching morning shove. Quick look is probably towards the 190s range, 185, 190 for failed follow through. And, exhaustion zone, I'd probably use all the way up to VWAP. So ideally 190 to 2 push, use this top level as risk, but I'm thinking it doesn't get too much higher. So we'll see what happens with that. Maps, higher the better. I think there's going to still be a little bit more action in this. It'll be a quiet, it's not going to, make you rich kind of trade. But I feel like a lot of people don't go back to the well on a few of these names where they still got another 2 or 3 days of quiet unwinds that, just kind of add up on the side. You get on the right side, you let them work, right? So that's sort of the thought process there. But I do think if it has a morning shove and maybe gets back and test, really anything. I mean, ideally 2 would be like 220 to VWAP level. This would be a fantastic kind of ideal exhaustion zone. So 220 to 225 or so, and then see it exhaust out. And I'm thinking that it could go all the way back towards that 175 level, especially if Tilray, comes down. Beat, I want to stay familiar. I have it on failed follow through. I'm interested if it stays heavy versus pretty much this 565 range, 570s. I believe that's actually been support. It was like a key level the other day too. So you can kind of see that if 570 starts to become peak, then maybe we start to fade off. It was a very nice trade and great trade opportunity on Friday, Thursday and Friday. But just be cautious. You don't want to get in a situation where you're like, this thing has to. And, Goss is an example that, went up and it never came back. RYTM is another example of one that kind of went up and never came back. And then we had TH. Was another one that went up and never kind of came back. So I'm not saying that it's one of those, but I'm just saying, I know a lot of people are looking at it and they're like, all right, it's up too much. It's overextended. It has to pull back. Just make sure that it agrees with you. Don't, be that trader that's, scale, and then you get blown out for no real reason. Other than that, ADTX, higher the better. Fantastic trader the last few days. I covered the majority of it after hours. I have small left, but another fantastic, channel play that we talked about, and pretty clear levels. 375 was the cover kind of zone, and we had basically a 4 kind of exhaustion level. So 390s to 4 was that exhaustion range. So you can see that, if you just draw a nice line a little bit lower, and you can kind of see the same sort of thought process as LUCY. KITT, higher the better as well. Going back to ADTX before I forget, I'd love to see 380s push and then fail. I do think that it'll be sort of that unwind type trade off the radar in a couple days. Just like KIT, same deal. Higher the better. If you're oversizing these, you're going to get chopped up. If you kind of trade and spread your risk around a couple different names of that same sort of thought process, maybe 3 out of 4 work. One starts to go the other way, you stop out. The other ones, pave the way. So that's sort of how I trade these types. Continuation side, WVE has been very nice grinder since this big volume day here. It's been sort of soaking up since, so maybe somebody positioned this day and then it's kind of been in the market since. But we're coming up on a nice little breakout potential, worth watching in case it starts to look like it wants to do a multi-day run. Couple others, top, and you can see the front run. So, I mean, this is a very heavy watch for me. If and when it's time, you know how this one ends. So, it's not easy. Look at GSUN. So, don't sit there and think like, oh yeah, this is no brainer. It's going to go down just like all the rest. Yes, LGHL, you guys, if you paid attention on Sunday Video, you were prepared for. IMTE, if you paid attention on Sunday Video, you were prepared for. And the same deal on JWEL, if you paid attention on Sunday Video, or any of the scans, you were prepared for. Trade came, we were prepared. Top likely comes, but it's a thin name. Is it going to go to 40 first? Is it going to just hit a wall at 22 and come down? We both know likely how it ends, but that doesn't mean you can't go broke first. So just remember that, yeah, it's got all the markings, but that doesn't mean anything until it's time. Same deal with ILAG. So far, nice steady move, and I've been noticing this. Jewel came back on the radar because they started to float it up. So same deal. ILAG. This is just a time. It's the time is ticking on this thing, and at some point the trade's going to come. It's just whether or not you've lost it off radar or not, or you've exhausted yourself trying to find the top without waiting for all the kind of stars to align. And we've gone over many times what it is that I look for exactly in order to start to participate. Other than that, Peggy and AEHR. So Peggy, so far so good. I don't want to appear as if I'm super bullish. I was, and I compared it to MRIN way back in the day. And if you go back to the breakout, if I can get there, this was that move. And actually the first move was probably more similar. This was the first time where it went from basically that price range to 570s. And then they did it again, and obviously went nuts again over here towards the 3s and 4s and the 5s. So I would just be prepared that if it wants to hold, it could continue to hold and go. But it's just, don't get too bullish, too aggressive, this has to go, because I've done that plenty of times when I'm up huge and I just minimize the heck out of it because my bias, I want more. Not in a greedy sense, but just I'm on the right side. Let's let this thing work. When you get a double that fast, it's just good overall. If you took a sample size of 10 or 50 or 100, it's probably good to always lock in a good chunk when a move happens that fast. And then if it continues to go, it is what it is. You can always add back. Last but not least, no position either. AEHR. AHR and WVE. I had no positions in, but it just, interests me. AEHR, there it is. Always has that, it just keeps on coming back. So this is one of those, I just feel like we're going to look at it. It's going to be like 22, 25, 30. This was a huge trade for me. One of my biggest swing trades, second to maybe LGVN or something like that. But I always focus on it. I always know that it likes to hold longer than you would expect, but I missed it this round. Judah's been all over it. Divided champ in the room. Nice breakout. Watch dips. Potential for breakout there. But going all the way back to this type of market, it's about identifying what trades that typically would make sense. Small caps, whatever. If you nail that trade, don't be afraid to be that liquidity. When it flushes down. Because what I was talking about in the room this past week is if you've got your bids there, you're part of that liquidity. But after that exhaustion, either the flush or the parabolic move, it's thin in between, right? So when you need to make a move, you're forced with whatever liquidity's there. And if you start to make a move and then somebody sees you making a move and then it just starts to kind of grind up like FNGR and a few of those other ones that probably squeeze the heck out of people. So TOPS is another example. You don't have to be, this TOPS intraday. Same kind of situation where it was sideways all day. And are you trying to figure out which way it's going to go, and then they scare you out, and then you miss the trade altogether? Well, guess what? I participated right here. No headache throughout the day. Wait for it. A lot of times, the big move is after the first move. So stop trying to figure out stuff. Stop trying to anticipate stuff with size. There's nothing wrong with getting in there, but just be cautious. But that's about it. I think that's all you need to know this week for the week ahead. And we should have, I think somebody said the Traders for a Cause videos were already uploaded to Impact, but I will verify that. I'll probably tweet some stuff out this week. But once again, if I didn't say it last week, I do appreciate, I met a lot of great new friends, new people. And that's half the battle, getting out there and putting your first foot, your best foot forward, meeting, coming out to meet, people that you look up to, colleagues, people that you work with, whatever the case may be. And, that's the first step to, really securing proper relationships long term, because you're going to need your network to make it through. Otherwise it's going to be a very, very, very lonely journey. And it's always nice to have other people on your side. So have a great rest of the weekend, and we will see you in the room tomorrow.